You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That rockin' bit of tunage means it is time once again to rock out with the Option Block. It is Monday. It is noon Central. It is 1 p.m. Eastern. Do you know what your portfolio is up to? Let's find out together. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you are enjoying this and hopefully many other programs out there. Seems like a lot of you are these days. Again, if you just subscribe to this one, get on out, make sure you subscribe to the whole network. And if you like what you hear, no matter what program it is, leave some feedback. We do love to hear from you guys. Just don't ask questions on like your iTunes. That's more for like the reviews of what you like and stuff. If you have a direct question, you know how to hit us in a more timely fashion. If you want it answered almost instantaneously, then join us on the live chat there every Monday and Thursday for this show, noon Central, 1 p.m. Eastern, and throughout the rest of the week for our other live programs that we do. Keep those questions coming. We do love to hear from you guys. We know you guys have a lot of them these days, and who can blame you? So we'll do our best to answer as many as we can. And joining me to help me break down all of your questions and comments, as well as what the heck is going on out there in these crazy markets. First off, when we go on out to the hinterlands of Chicago, we are joined once again by the Uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the Option Block program, sir, on this brand spanking new week. How's it going for you so far?
Always exciting, especially when I am introduced as the Uncleist. No one is more uncle than me.
I'm going to say there is no greater uncle uncle than you, sir. So enjoy it. Enjoy your ranking there on the list of the greatest uncles. Uncle Sam may be up there. You know, I'm hard pressed to think of other great uncles at the moment, but you're certainly up there on the top of a very short list. And also joining us for doing a rare bit of double duty. I'm not sure if he's an uncle. I guess we could find out. What he is, though, is the 2.0 version of Andrew. Yes, he is Andrew 2.0, a.k.a. Andrew ROCCO, the Educational Content Strategy Manager. Say that 5 times fast. Over there at TradeStation, Mr. Andrew 2.0, welcome back to the program twice in a row. To what do we owe the honor, sir?
Thanks for having me on again. Great to be here, Mark.
And last but certainly not least, although sometimes he will argue that he is the least, I guess we'll find out if he is the least today. He is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of a Costco perhaps near you, as long as he's wearing his mask. They require a mask these days. Mr. Meatball, welcome back to the program. Have you been to a Costco near you lately?
Not in a while. I've been Costco free. I did have to go to the Ace Hardware to get some vegetation yesterday, but other than that, I've been mostly avoiding retail.
Yeah, I haven't set foot in a store. I can't remember how long. It's been at least a couple of months out here. So I guess I'm contributing to the problem, or perhaps a solution, depending on how you view it, by paying all the delivery folks to bring stuff to us. As we keep on moving right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there. A lot of stuff going on out there to kick off this week. Another weird mixed start to the week. Again, it kind of depends where you're hanging your hat, exactly where your focus is today and what kind of day you're having out there. But for the most part, we're seeing, again, another mixed bag out there. The S&P, once again, the Goldilocks, threatening 0.5% in the red today. The Dow leading the charts to the downside, off a little bit more than 0.75% to the dark side, in keeping with our May the 4th theme out there. May the 4th be with all of you out there, listeners. And then, of course, NASDAQ bucking the trend, going upside, up nearly 0.2% to the upside. Gold rallying a bit. Crude oil also getting a bit of some love out there again, up to 2018 out there or so. Even our much beloved, much bemoaned USO managing to catch a bit of a lift today, up about 8 cents or about almost 0.5%, threatening that 19 handle. Yeah, it sounds crazy. Remember, it reverse split 8 for 1 not too long ago. So before you think, oh my God, it rallied all the way from 2 up to 18, almost 19. No, more of a reverse split magic out there. Coming into showtime, we saw our old friend VIX Cash at around a 37.5. That put it up almost 2.5 handles from where it was this time last show. Our old friend, the VVIX, a.k.a. the vol of vol. Remember, we talked about VIX getting a little bit frothier. I think Mark said actually a little bit spicier on vol views last Friday, and that's exactly what we're seeing. VVIX kicking up a little bit as well, up about 4 handles to about 122. So still frothy around that 120 range out there. And our old friend, VXX, a product that in these backward days doesn't like to erode as much. That's up about 2.5 handles to about 41 right now. Of course, they're coming off the heels of a bit of a weird mixed week last week as well. We saw most of the major indices off. S&P off nearly 0.25%, NASDAQ off nearly 1/3%, Dow Jones off nearly 0.25%, Russell 2000 bucking that trend, up almost 2.25% last week. We talked about that a lot on TWIFO. If you like a deep dive into all things small cap and just what the heck is going on out there in the small cap land, it's moving and shaking every single week. It's leading the dance to the upside or to the downside, but it's moving. Check out TWIFO. Of course, we're coming off the heels of a good month as well for all things equities. Of course, that's coming on the heels of March, which was the worst month since ever, pretty much, for the S&P 500. And then April is up nearly 13%. That puts it hot on the heels of January 1987. Everyone always goes back to October of 87 for dark days. But on the light side, actually, January of 87 was pretty good. But you got to go all the way back there to get another month that was better than this past April. And NASDAQ's actually up over 15%, nearly 15.5%. That puts it a little bit shy of 3% away from its high of all time back in January of 2020. Of course, recent action driving that back a little bit. All that all that movement out there, all that volume on the equity side means, of course, a lot of volume on the options side as well. We got the numbers now hot on the heels from our friends over there at OCC, a.k.a. the Options Clearing Corp, announcing that April volume was 551.5 million contracts. That's up about almost 43% from April of last year. Let's parse that a little bit further, as we are wont to do, break down overall options volume, because remember, they clear other stuff at OCC as well, but mostly options. Let's get into exchange-listed options volume. That was 548.8 million, up about 44.3%. Drilling down a little bit farther, equity options, 515.8 million contracts, up nearly 50% from last April. Cleared ETF volume was 238.7 million. That's up, get ready for this, 91.9% from April of last year. Index options volume was 33 million, up, actually a 7% decrease, I should say, from April of last year. A lot of that reflecting the S and indeed other index products now going fully electronic. We talked about that before. Some of the liquidity a little bit harder to source out there. But the more interesting nugget I saw out there that really kind of leapt off the screen to me. Remember, OCC clears futures as well. Are predominantly VIX, although they used to clear the old NFX stuff. Not much of that really going up, as well as one Chicago stock futures. Not a ton of that going up either right now. So it's pretty much 99.9% VIX. The cleared cleared futures volume, I should say, was 2.6 million contracts, a 52.1% decrease from April of last year. Also worth noting, that's about almost a 2/3 decrease from March. March was 7.8 million contracts, and April's 2.6 million contracts. So falling off a cliff from a VIX futures perspective, which was a little surprising given the fact that it's not like April was a quiet month. But before we keep parsing that, let's go around the horn and see what everyone else is lighting up their tape. Let's start in the land of the new and improved version, a.k.a. Andrew 2.0. Mr. Andrew 2.0, what was lighting it up over there in the land of TradeStation since the last time we chatted? And then also, are you surprised by some of these numbers coming out of OCC, sir?
Yeah, I am surprised by some of those numbers coming out of OCC. One thing I'm seeing, and it's been consistent, is our clients have overwhelmingly stuck with SPY above all else, which makes a lot of sense, obviously, in these more volatile environments like the one we're in now. I'll run you through the top 10 real quick. SPY was number 1. Tesla was number 2. General Electric, number 3. Ford, number 4, AMD, number 5, Apple, Amazon, TQQ, Boeing, and Microsoft. And just a few I want to parse a little bit further. General Electric is trading near its long-term lows, so that one looks a little bit ugly here, but we'll see how it acts along that really long-term level. AMD has shown some nice relative strength. It hovers near its all-time highs. It's forming what looks like sort of like a cup with handle type pattern, and it's just above that 50-day simple moving average. So one thing I saw in AMD come through is 802 of the June 19th 60 calls, so seeing a little bit of flow in AMD. Apple, despite all the market volatility, Apple is above all its key moving averages, attempting to go inside and up on a monthly basis. And then we talked about this one last week, but Boeing, that's a big one to watch, obviously, for the market as well as the individual stock. It has so much room both ways. Last month, it printed that inside monthly candle. A move above or below that candle, in my opinion, will likely determine the midterm price action in that stock. So one thing I saw in Boeing today was some unusual call options come in. 354 of this Friday's 145 calls come in. So a little bit of flow in Boeing as well. So QQQ did drop out of the top 10. So as always, if you guys want to learn what TradeStation clients are trafficking in, you can go to insights.tradestation.com, where we write that weekly report covering the action.
Not surprising, I think, really in the SPY category. I'd expect people to flock to that, but some of the other ones are probably a little interesting. Boeing, of course, interesting one as well that is getting a lot of traction. Of course, Mr. Buffett maybe taking some of the wind out of their sails out there, saying he doesn't foresee a lot of need for planes in the near future. In fact, he probably thinks we have too many planes out there. So that probably not maybe welcome news to Boeing shareholders. Of course, our friends across the street there have already weathered a lot of storms out there already. And who knows, perhaps more to come or perhaps a light at the end of the tunnel. We shall see. Let's head on out now to the greasiest of Meatball. Mr. Meatball, sir, what is lighting up your tape out there? What are your crazies out there in the pit chat trading? And are you also, like me, a little bit surprised that the VIX futures numbers were so anemic in April, sir? A lot to unpack there.
I was not surprised that things were anemic. I mean, if you look, really, I think that, our friend 50 Cent put it best when he said, you know what? VIX hedging is not going to work as well as other forms of hedging for a little bit, and he's been right. The VIX has kind of been out on its own, just kind of flipping around, fumbling around, and it's going to take it kind of calming down before it becomes an asset that people really want to use. And, the TVIX and all the other products that were heavy VIX users have backed off a little bit because, obviously things it slowed down a little bit. So that is not surprising at all, frankly.
Or in this case, not a little bit, but actually 2/3, which is a surprising number. Well, in addition to the VIX futures kind of, shall we say, falling off a cliff, what else is lighting up your tape out there, sir?
So, I'm sorry. I thought, I'm watching Apple and Amazon. They're kind of right now, as the market goes, they goes. And that's really been, I think, the key. There's so much of the triple Qs and stuff like that. And so that's really what I think has been the most interesting of all of it is the movement in Apple and Amazon and those names. Little bit of action in oil. USO option volume still crazy. WTI still crazy. But it's a lot of more of the same in terms of trading. A lot of earnings coming up this week, so I think we're going to be kind of jumping on some of that as well.
Yeah, a lot of earnings coming up. We'll parse all that in a second. But first, let's go out to the Uncle list of Mikes. Mr. Uncle Mike TOSAW, sir, what is lighting up your tape today?
Well, a couple things from where we are. Of course, with the action today, technology and energy are the two sectors that are leading on the day. In terms of what is lighting up my tape, we do have Amazon up on the day. We have Apple up on the day slightly. And so we have some of the FANGs look to be recovering from a little bit from overall from what was happening last week. Of course, Google is not in that camp, but the remainder of the FANGs are for what's actually recovering. With the VIX up a little bit, we have that. Where we are right now from a technical perspective is that the news of the day from the standpoint of technical analysis is that we did dip below the 2,800 mark. That is kind of a mental key number, but for us bulls out there, we didn't dip below it very long. So we were at, I think, 27.97 was our low on the day for the S&P, and we're well above that right now. So we do have that going in our favor as the bulls. A couple of things that I think we need to really have a good understanding of is that, number one, this isn't over yet. And let's say that we open up all of our economies or open up all of our states and people go back to work. Let's just say that in theory it happened tomorrow. The fear that we're going to have a second wave is still there. And the perception that we are going to still have a second wave of the coronavirus is still there. It doesn't necessarily mean we will. But the fact that we have that fear of it's going to affect us in one way or another. Because let's say we don't, I think it's still going to take a while for people to go out to restaurants again, to go out to Disney theme parks again. Disney was actually downgraded today, the day before their earnings. So that's something else to take that's lighting up the tape, so to speak. So even if we were to have states open up, we're still going to have to fight with that, even if everything is totally fine with the disease. Now, the other thing to think of it, or the other thing to think on this is that even if we do have either a cure or a vaccine tomorrow, which we're not, but let's just say in theory that we did, it still hasn't been tested. It still hasn't been proven, so to speak. And so we still have a little ways to go with the problems of the coronavirus, even though let's say that we're totally over, it's really not over as of yet. Now, the good news of this, as a market bull, a lot of times the market is early to things. So as soon as the market thinks, okay, this is going to be over in September, the market's going to say, all right, now that we know it's going to be over in September or October or whatever, the market usually does rally before the good news happens. So I think that's another thing that's important in all of this. Q2, Q3, I think we know that those quarters are going to be bad. I don't think there's anyone that's going to argue with that. I think the market knows that. I think that's already priced in. Right now, what we have to wonder is, what is Q4 going to be like? Are we going to have a football season this year? Are we going to have life as we know it again this fall? There's a lot of things that are up in the air still. So overall, we're not out of the woods yet. But as soon as it looks like we're going to be, typically the market rallies.
Let's see what the market is up to today, shall we, in terms of overall options numbers out there. Kind of a light day. Like I said, by the way, it looks like the worm turning a little bit out there. NASDAQ now giving up its green, its lead, and turning to the dark side along with the rest of the market out there. It looks like off a little bit more than 0.1% or so out there. Coming into right about a few minutes ago, actually, we're seeing fairly light numbers overall out there from an overall options perspective. VIX at about 135,000. The ATVI is already pretty anemic at 330,000. So we're back to like mid-January seasonally adjusted lows out there from a volume perspective compared to the north of 1.5 million ADV not too long ago out there in VIX land. SPY closing in on 2.5 million. That puts it right around half of its ADV, which is just a tick north of 5 million. The S at 603,000 contracts. The ADV 1.2 million, so pretty much right around half there as well. The Qs 600K. The ADV 749,000. So the Qs are lighting it up out there today. It's already closing in on nearly its ADV. Not surprising. It's had some of the bigger swings intraday out here. And the IWM out there doing 320,000 contracts. The ADV 709,000. We mentioned Russell 2000 has been leading the dance for better or for worse over the past month or so. And looks like that's contributing to a fair amount of volume out there as well. Coming into right now, let's see what the top 10 most actives are out there in terms of individual equity options. Let's go to number 10, the aforementioned Disney. Uncle Mike was just talking about them. They're at 136,000 contracts. They're getting a downgrade. They're threatening the 100 handle again to the downside down there. 136,000 contracts. That's what it cost you to break into the top 10 today. So a decently active day, I guess you could say. Not exactly talking 50K to break into the top 10 out there. Number 9, Facebook, 140,000. These mostly seem like names people have heard of out here. Number 8, haven't seen this one on the top 10 in a little bit. This is U.S. Steel. It's up about 60 cents today, or nearly 8% to $8.09. And it's also good for 145,000 contracts. I'll leave the argument aside of whether an $8 stock already is an option and just focus on the volume. Again, 145,000 contracts. Number 7. Our aforementioned friends across the street there, Boeing, 158,000 contracts. Number 6, Microsoft, breaking the 200K level, 201,000 to be precise. Number 5, Delta Airlines, 210,000 contracts. Number 4, AMD, a.k.a. AMD, at 264,000 contracts. Number 3, Tesla, taking a rare break. I guess Mr. Musk has been quiet on the Twitter front so far today, so that's calming down the Tesla volume a little bit. 281,000 contracts, though, still on the tape. Number 2, the fruit company, 322,000 contracts. That means number 1 is actually a name you probably wouldn't have suspected out there. Not one of our usual suspects out there. It's American Airlines, 361,000 contracts. They're trading $9.54 right now, off about $1.10 or a little over 10% out there. So not a good day out there for American Airlines. Let's see what's a good day out there for earnings. It is yet another hot and heavy earnings week. Before the bell, we had Tyson Foods, we had Lowe's, we had a bunch of other names before the bell, Calgon Corp. Then let's see, tomorrow we've got Marathon Oil, we've got Disney. So they're already getting downgraded ahead of their earnings. The talk is, the rumors that someone who is an annual pass holder down there at Disney, the rumors are the parks are going to open on June 1st. I think that remains to be seen whether that's actually possible. But that's been the rumor, at least so far. We'll see if they have more insight on that tomorrow. Either way, the stock taking a bit of a hit, threatening that 100 handle again to the dark side. Beyond Meat also tomorrow will be an interesting one to see. We talked about them on the show last week. Activision Blizzard, maybe some good news on the gaming front. We'll see. And Pinterest, for those of you who are interested in pinning all things online. Wednesday, CVS, GM, PayPal, Peloton. What a gift this has been for Peloton. How they went from being kind of an expensive luxury item to pretty much overnight kind of the only gym in town. So for them, this has been a ray of sunshine. We'll see how the numbers shape up later this week. Etsy and Square and Lyft on Wednesday as well. Thursday, JetBlue, Roku, Uber, and Dropbox. Let's see if we have any interesting earnings. Yeah, we have earning move results reports here. Again, a lot of new ones hitting the tape as we speak. That means they're hitting the optionsinsider.com as we speak as well. Head on over there whenever you're listening to this to get the latest. Again, there's dozens, if not hundreds, of tickers being analyzed here from a vol perspective. I'll just break down a few for you here. Tyson popping off before the bell today. They closed going into their report at almost exactly $60, $60.01 to be precise. They were expecting 3.8%. They delivered nearly 9% to the downside. So a rare outperformance of vol, at least out here, which is kind of interesting. Again, I've mentioned for a while now, names have been pricing in a lot lower vol than you might expect given the circumstances, and Tyson at least blowing the doors off. Of course, their CEO kind of infamously putting out that letter about the weakness of the food supply out there of late, so a lot of vol, very focused right now on the meat processing plants and meat processing industry out there. Let's see if we can find a couple here that are interesting in the upcoming reports. Again, there's a million of them here, listeners. Looks like we got Shake Shack, a few others. Let's go to Activision Blizzard. You mentioned them before. Ticker symbol, of course, ATVI. They're popping off after the bell tomorrow. They were coming into this report. They were 64 and about 3/4. They were pricing in $3.20, which is actually a little rich compared to previous moves, which are about $2.55. One of the few names that's pricing in a little bit more vol, which is perhaps surprising and not maybe you wouldn't expect to see, that name in particular, but that's one of the few that is. Disney, let's see, they're popping off tomorrow as well. They closed at the time of this report 105.5. They were pricing in nearly $3, $2.96. In the past, they've moved about $2.50, so they're pricing in a little bit more juice as well. Again, that doesn't surprise me. I think more names probably should be doing that right now, given the fact that it is almost a complete unknown out there in terms of how folks can process this and price this in. CVS, they're popping off on the 6th. They were at $59.70 at the time of this report. They're pricing in about $2.80. They've moved $2.60. So a little bit more juice. Maybe we're seeing the warm turn a little bit here in this earnings season, where the first couple of weeks names were underpricing vol. Maybe people are finally starting to get it that, hey, we don't really know what the hell's going on in the future, so perhaps a little bit more vol is warranted. GoDaddy's on. There's a million names here, listeners. We could spend the whole rest of the show parsing this. Worth noting, by the way, on the notion of earnings performance, the results so far have been pretty much worse than expected. They are overall, companies are beating forecasts by the lowest rate in over 10 years. So the fact that it's kind of a crapshoot right now from an earnings perspective should probably equate to a little bit more vol, not less vol down the road. Here's Roku. They're popping off after the bell on the 7th. They were at $114.02 at the time of this report. They were pricing in $14.87 in the past. Get this, listeners. They've delivered $24.46, so a nearly $10 worth of less vol that Roku is pricing in. Now, they've been pretty monstrously volatile of late, so maybe some of that has to bear in mind there as well. But still, that's a lot less vol than we've seen in the past. Uber, let's see. Uber actually kind of in line. Uber's at about $28.40 at the time of this report. They were pricing in $1.98. They've delivered $1.97 in the past. So Uber actually pretty much right in line there, which is kind of interesting. Let's do one more. Let's do Marathon. Marathon was at $84.75 at the time of this report. They were pricing in $1.94, and they've delivered $2.08. So a little less vol out there, which may be counterintuitive given all we've seen in the energy space. There's a lot more to parse, listeners, but we got to keep on rolling. It is time to get weird. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners. Welcome to the Odd Block, the portion of the show where we get weird. I like when Andrew 2.0 joins us because he gives my voice a bit of a rest. And he regales us with some interesting activity that he's been seeing out there on the TradeStation platform. Andrew, you touched on some of it earlier, so if you wanted to go deeper into those, or perhaps you have some other trades that have come across your radar, now is the time, sir. The floor is yours.
Gotcha. Yeah, so I have actually a few that you mentioned came across my hot list app in TradeStation, one of them being IWM. So IWM, what I saw is 27,000 of the December 125 calls. Those rolled up to the 140 strike. So these were originally opened on March 24th. And this is an interesting one to watch, in my opinion, because like you mentioned before, IWM was the weakest major index before the market kind of broke wide open, and now it has been the strongest off the lows. So though it had kind of that nasty reversal last week, It's now back to a confluence area as far as a price congestion on the daily chart. It's coming in back to its shorter-term moving averages, its 50-day moving average, and it also has a potential gap to fill above at around 130. Another one that you also mentioned was U.S. Steel, ticker symbol X. That one saw 1193 of the June 20th 8 calls come in for around 87 cents. I know it's been beaten down, but this one caught my eye because it had a look below as far as price goes, below the 2016 lows. And then all it did is reversed higher. So it formed sort of like a bear trap, what technical analysis would call it, and now it's going inside month and up. So this would be kind of a mean reversion type play. There's plenty of room higher, and what I like the most about it is sentiment in this sector is very, very poor at this moment.
All right, let's get into a couple of those. Those are interesting because those are not names we usually parse on. We have had U.S. Steel on before, but in terms of, in the odd block, we don't get a chance to talk a lot of index vol. Let's talk IWM a little bit because, yeah, it has been fascinating to parse. And if you like all things small cap, listeners, again, I encourage you to check out TWIFO. The folks from Fussy Russell do a lot of analysis of the data out there, and particularly that spread between the RVX, which is, of course, the Russell 2000 VIX, and the VIX itself. And when that gets wide or very narrow, and lately it's been very wide, it averages around 3.5 points or so. It got up to 14 points in the height of the madness, and then has come in a little bit, but still around 8 points or so. So still fairly wide, in fact, extremely wide. So those are always interesting points. Right now, the IWM at about 123 3/4. A year ago, this thing was way north. It was about 160, almost 161, and it kind of hovered around those levels, like Andrew alluded to. It was kind of underperforming the other major indices until all this madness happened, and then all of a sudden it sold off harder than just about everything else. It got down to about $99. Actually, I think its intraday low was 95.69, and then it kind of bounced back up harder than most of the other indices. Like I mentioned, last week it was up again. It's had almost 5% rally days a couple times last week. It's been just explodingly volatile of late. So to see someone, Andrew, sounds like keeping that party alive, keeping that upside roll party alive is kind of an interesting one. Mr. Meatball, is IWM really a product that you see a lot of your crazies trading? I mean, lately it's been a lot more volatile than a lot of the other indices. So has that drawn some of your vol trading club to IWM, or is this not a name you guys really look at a lot?
Yeah, you know, what's interesting is I know that a lot of people are paying attention to how much it's underperforming, and, you know, how, you know, sometimes it's the Main Street Index, but it's really just a hodgepodge, especially at the top end. It's a hodgepodge of a lot of little biotechs, little banks, and little energy companies. And so we do have some guys that do enjoy trading. It definitely likes to whip around. But a lot of the trades on like long-term underperformance, overperformance just aren't there because really the S&P is not nearly at the same index it used to be, and neither is the Q. So, you know, these individual indexes have kind of gone off on their own islands. But, you know, I think we talked about this. The biggest stock in the IWM is Teladoc, which, you know, when you think about a major 2,000 companies, and the biggest name is Teladoc, you know, it makes you wonder whether that's really an investment grade.
That's not your favorite name? You don't check that in the morning when you're brushing your teeth?
No. And, you know, it doesn't have, so I'm more interested in like what, you know, I think maybe the like MDY, the S&P mid cap, when you're thinking Main Street indexes, that's going to be a lot more like your local bank. It's going to be a lot more like Domino's and Papa John's and you know, energy companies you've heard of. That's so, you know, that maybe is a little more appropriate for like a Main Street index. The Russell 2000 is very much a grouping of very small companies to see how they do. And with some of the giants getting so big, being able to scoop up these little names before they truly have a chance to take off, you know, sometimes you wonder whether that's a big piece of that underperformance. But yeah, no, we're definitely enjoying. It's definitely become kind of a fun tradable asset. but as an investment vehicle, it's not one that a lot of my guys look at.
And you also mentioned some bullish paper here in U.S. Steel. It's like stock trading right now, $8.20. Good run for them today, up 9% or nearly 70 cents out there. So they were trading in a 7 handle not too long ago. A year ago, U.S. Steel pretty much double what it is right now, about $16.60 or so. Then it kind of slowly trended down to where it got down there in the nadir of about $4.54, actually, was the low for U.S. Steel. So that's a pretty low out there. Of course, it has a nice little rebound. Not quite 2x, but a nice little pop here of late. Mr. Andrew 2.0, I need to know. I need to get your opinion on this. This has kind of been a hot button issue for us here on the show for some time, going all the way back to the Viceroy days and even beyond. He was very much an outspoken opponent of trading options on cheapy names. Usually that's sub $5, but you could roll that up to under $10 as well. We've all expressed our various opinions on doing that. Now it sounds like someone is out there spending a fair amount of money on options on an $8 stock. I'm curious, Andrew, what are your thoughts on this? Do you think it's a good use of capital? Is it a waste of capital? Is it something doesn't really bother you that much? What are your thoughts on trading options on, let's say in this case, sub $10 stocks, sir?
Yeah, so I don't really have any discrimination against doing that. I've had more success in the higher priced, liquid names. Of course, U.S. Steel has plenty of liquidity, but really when I'm looking for options to trade, I'm not only using unusual options flow, it helps me to sync it up with a technical setup. So in the case of U.S. Steel, for example, we had that nice washout, probably shook out a lot of longs, and then we came right back up, probably shook out a lot of shorts. So everyone is frustrated. That's kind of how you want it. And then for my system, I would have got a monthly signal to the upside. You have that inside month and up. So I have no problem with it as long as I'm seeing the technical setup there. I never place a trade solely based on unusual call action.
So a little more egalitarian there on the options pricing side. Well, we got time for one more, Mr. Andrew. Sounds like you guys have been busy on the unusual activity front. So what else has come across your radar, sir?
So another one that came across my hot list app in TradeStation where I saw some decent flow was Zoom, ZM. This one saw a buyer of 840 of the May 22nd weekly 132 calls for $15.30, so worth about $1.2 million. This one is interesting not only because of the amount of premium paid, but also because of the recent relative strength in the name. Zoom was already a leading growth name prior to the COVID-19 pandemic, and like Peloton, like you mentioned before, it's only benefited since. And from a technical standpoint, it's testing that 50-day simple moving average for the second time since its breakout in February. So it's really been contained to that 50-day moving average. There's also that potential gap fill to fill above.
Give us those strikes one more time, please, sir.
Yes, that was the May 22nd weekly 132 calls. They paid $15.30 and it was worth about $1.2 million.
Interesting. I'm looking at it right now. Again, Zoom right now at about 142. So you got another good day for Zoom, up another almost 2.5%. If you're curious, this is the name a lot of people prior to the pandemic weren't that familiar with. It was trading $78 a year ago. Obviously, pretty much 2x that now. So continued upside. I don't know, Mr. Rock Lobster, Mr. Meatball, you guys don't talk a ton of individual names. I know every now and then they come across your radar in the pit chat, but Zoom's been seemingly on everyone's lips out there of late. Is this a name you guys have been analyzing or looking at for any trades in the pit chat of late, sir?
Yeah, it is. And the vol is extremely high, super flat curve. They're buying downside and upside. I think it's interesting that call was in the money. So, when executed, so that's a little strange. I'm noticing there. I mean, vol is expensive in Zoom, up and down, and really all over the place. So that's an interesting one. A really interesting trade that I want to watch closely. I'm wondering whether that was whether there's a stock sale on the other side of it. And the guy wanted to maintain some delta, but take a lot of money out of the market because trade like that smells of stock replacement.
It does have the whiff of stock replacement. Again, when we talk about call paper in the odd block, usually it's someone swinging for the fences with some near-term out-of-the-money calls. It's not usually meaty calls like this, which does make it worthy of analysis. Maybe we'll put this in our to-be-watched category as well and come back to these bad boys. Meanwhile, it's time for us to come back to Uncle Mike because it is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. It's Monday. It's time for your weekly dose of strategery. And who better to do so than the uncleest of Mikes, Mr. Uncle Mike Tucson. Mr. Uncle Mike, sir, what do you have in store for us today?
Hedging short puts that really aren't hedged, kind of. How does that sound for a good lead-in?
Okay. Go on, sir. Tell me more.
All right. Okay. So what I want to talk about today is, and this is something that I've done before and even will do in this market, but sometimes I'll sell a naked put that's not really naked. So in other words, let's say that I want to sell puts on XYZ stock. XYZ stock's trading at $100 a share, and I want to sell the 100 puts. And so I do that. My risk is technically $10,000 if I sell a one lot. Now, in reality, the only amount I really would have to have in my account at the time would be roughly $2,500 to $3,000 approximately, just depending on your broker. And that's a naked put. Now, one thing that I've done, or I'll have done this and will still do this, is I'll put that small amount of money in the account, but I'll have the remaining 7,500 or whatever, or 7,000 or whatever it is at a savings account or another account elsewhere, ready to ACH over at a moment's notice in case I have to take ownership of the stock. And so by doing that, it just creates another way with which to maximize the use of your capital. And instead of earning whatever the broker's paying you, you can earn a little bit more interest in a savings account, perhaps. Now, of course, in this marketplace, when interest rates pretty much went to nothing a couple of weeks ago, that's not quite as popular to do. You might as well just keep it all over there at this point. But either way, you're still selling the puts. Now, what I wanted to get into today was just as I'm just looking at all the different option chains, which I typically do constantly all the time, I'm looking at this. And so I was looking at this on SPY. And so let's say that you're concerned with some type of an overnight dip over the course of the next couple days. Now, even if you're selling options 1 week, 2 weeks, a month out, what I'm about to say can still work for you. So I'm looking at the options. I'm looking at the puts that expire in 2 days on Wednesday that are in the 250s, like in the 255 level. And you can buy them for a penny. And so I'm looking at this and I'm thinking, okay, let's say someone's selling options maybe 1 month out at maybe the 270 level. Okay, can't really argue with that. That's not that outlandish of a trade. I'm not in it, by the way, full disclosure. But let's say you're selling an option that's at maybe the 265, 270 level, 1 month out. And when you're doing that, you have the risk of roughly $26,000, $27,000 in theory if SPY were to go to zero. Now, let's say that you're concerned with some type of an overnight risk over the course of the next couple days. Well, you can actually buy a 255 put or a 253 or somewhere in that area for a penny or 2 pennies. And so by doing that, you might think, well, wait a second, Mike, I don't know if I want to be buying these options that I'm never going to use, but I would tend to say that in markets like this, those options really aren't that bad of a thing to purchase if you're doing it for this reason. Because one thing that I've noticed throughout time is that the market seems to take a serious downturn when we least expect it. Otherwise, if we did expect it, then people would be short quite a bit and or have lots of puts on it. But one thing that I'd like to say about this is that we've also had a lot of overnight risk in this market. A lot of times since the coronavirus started or since this started happening a couple months ago, we've had a lot of major moves to the downside overnight. And folks, there is not one thing that you can do about that if we're having these moves overnight and you are you're selling puts. Now, of course, if you're in the futures options, that's a different story. But if you are in equity options and you're short those options and you want to get out of them or you want to roll them or you want to do this, you want to do that, there is nothing you can do about that. However, if you are considering wanting to have some type of protection, I'm talking about pure protection. I'm not talking about getting a better maintenance requirement, because you'll still have to have the same naked option maintenance requirement by doing this. But what I am saying is that if you are selling puts and you're concerned with overnight risk, which you really should be, something to consider would be buying some cheap garbage option for a penny overnight. And that could be the difference between actually taking on a 30 to 40% loss and something saving you overnight. And this can apply to stocks. This can apply to stocks. But when doing this is a way with which you can sleep at night, and it's a way with which you might be doing something really good. And that is my strategy block for today.
Thank you for that, sir. Meanwhile, let's see if we can squeeze a few of you on with your questions. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block portion of the show where you guys take the reins, your questions, your comments really quickly here at the top of the show. We asked you guys, let's inject a little bit of levity, a little bit of fun into these otherwise dire times. It is May the 4th. So may the 4th be with you. We thought we'd ask you. We flipped the script. Everyone's looking for your favorite Star Wars movie today. We thought we'd mix it up. Let's go dark side. What is your least favorite? Gave you four choices. Of course, allowed you to write in with your own as well. This isn't live before the show. It's going to be a quick one, so it'll be done by probably by the time you hear this, it should still be live. So you want to get over to add options. Make your voice heard. We gave you four choices: Phantom Menace, Attack of the Clones, The Last Jedi, and Solo. And so far, it's a tie, 30% each for Attack of the Clones and Solo, leading the pack. And then a tie for second place with Phantom Menace and The Last Jedi. I know you guys probably have your own voices out there, your own votes. Let it be known at options. Just mixing it up a little bit. But Andrew, you guys have been busy over there in TradeStation land, so that the clients have been ringing the phones off the hook. I always like to get a peek into what the clients are up to, what they're asking these days. So what are the clients calling up you guys and asking these days, Andrew?
Yeah, I've had a lot of people asking me kind of what I think about oil at these levels and what's going on in the market. And I think this is an interesting one to answer because I believe the oil picture has drastically changed over the last few days. One thing I'm noticing is that the August to July spread in crude is narrowing rapidly. Now it's down to under $2 as storage seemingly is finally freeing up. Production is dropping rapidly. Before it was about a $7 to $8 spread there. So I think it could also be noted that tanker rates have been crashing, which could also be a positive for the price of crude in the short term. Crude might be set to continue mean reverting as more and more economies open up for business as well. So that's one question we got through TradeStation here.
Yeah, you know, the crude landscape has been an interesting one, I think, to put it mildly, to say of late. Of course, the madness that was going negative and all the ramifications that were still being felt on that front. And, of course, for a lot of you out there, that pain was felt through a variety of products, including USO, which has morphed now. It's kind of become like a transformer. It's gone from G1 to G7. Who knows? It's a completely different beast than it was a month ago when it was just kind of steadfastly rolling its exposure to that front month WTI. It's all the way out to 2021 now in terms of its exposure. So if you buy USO now, it's much more of a broad representative sampling of the pretty much entire WTI futures curve at this point than it was, let's say, a month ago. So that could be good or bad depending on your viewpoint and what your outlook is for crude. I think in terms of the near-term survivability of the product, it's probably a good thing. If it was all front month, it probably would be close to going the way of the dodo right now, just from getting gamed on that and getting killed on that super contango as we see out there. Let's see if we had similar questions to talk about before. T-Mal and others asking about what we think of USO at these levels. We touched on that before in the past. Let's see. What do you guys have on the brain? Some of these are lengthier than we have time for. Let's go to Amateur Twin Mom. I like the handle. With a deceptively simple yet elaborate question. She wants to know, what's the best place to get started if you've only been trading for a short amount of time? And she put in parentheses, like 1 to 2 years. But Mr. Meatball, you guys train people for a living. What do you have to say here for Miss Amateur Twin Mom? I like the handle. She wants to know, what's the best place to get started? I'm assuming she means in options. She didn't include that. If she's only been trading, I'm guessing she means trading stocks overall, not options, for a couple of years. So someone's been trading stocks for a few years, wants to dip their feet in options. What do you recommend, sir?
I mean, I think I would start studying how options and stock are interrelated. And then from there, and then spend some real time on a deep dive on how options work and how professionals use them. And then a deep dive on volatility. You can find all of that at optionpit.com. We're happy to help you through that process. Feel free to email me and I can send you a couple things. But yeah, the real key is learn how the two interact with each other. How are options used to replace a stock and a stock position? Why do people buy calls? Why do people buy puts? And that's really the key to start. And then from there, dig into volatility, which is the insurance cost. You get volatility down, and then you understand why people trade a call or a put. And now you're in a position to start really developing a approach to trading. And that's how I begin the process. But what I always tell people is before a pilot gets behind the wheel of an airplane or the joystick of an airplane, they spend 6 months or a year in classroom work. Same should be for you. Spend a good amount of time reading and studying before you start slinging around options. And you're a lot more likely to be successful. Most people spend more time reading the instructions on a box of Kraft macaroni and cheese than they do before they start trading. And that's why most people lose. So if you have some knowledge and you educate yourself, then you're going to be in a position to succeed.
Mr. Uncle Mike, same question for you, sir. What do you have to say here for the well-handled Amateur Twin Mom?
First off, if you're going to put macaroni and cheese in the microwave and you let your kids do it, make sure they're old enough to understand that you need to put the water in those individual cups first, because if you ever put that in there without the water, it is the worst smell in the history of my entire life, just so you know, and it'll take you years to get out of your house. Second off, in terms of option trading, what I tell people to do, I think it's very important, know what you're doing first. If you have $2,000 to $3,000 that you want to learn to trade with, that's fine. Go ahead and start an account with a small amount of money, but ultimately, if you're looking to be a professional trader and you want to do this right, contact the guys at Option Pit. These guys, I've been in this business a long time, and I've seen a lot of education companies screw people over, and I have many stories about that from my years in this business. These guys aren't going to screw you. They're going to take care of you. And if you're good enough, and if you go to enough classes, Mark will even cook you some spaghetti. So if you want to learn how to trade, do that. That's the bottom line.
There you go. Well said, sir. If you want to get the premium stuff going, if you're a little nervous, you want to kind of dip your toes in the water first, whatever broker you're using, they should hopefully have some decent free educational content, at least get the ball rolling on where you should start. The OCC, optionseducation.org, has a lot of good free materials as well. I could also give a plug. I know a lot of you have been mainlining our Options Bootcamp show, which is back in the regular weekly rotation. If you'd like to learn at your own schedule, at your own pace, there's a lot of episodes there for you to sink your teeth into as well. Start at episode 0. Go all the way through. You'll feel pretty good by the time you get to the end of that. I'll throw OPR, Options Playbook Radio, a plug in there as well. Over 300 episodes of that. So there's a lot for you to learn at your own pace. And we start getting a feel for it. You start knowing enough to maybe ask some intelligent questions. A place like Option Pit is a good place to go to keep the ball rolling. We have to keep the show rolling right on into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. I kind of touched on it at the top of the show, but we are in the teeth of earnings season. So in addition to all the macro numbers in terms of virus and spread and what the heck's going on between us and China today, in addition to all of that, there also are a lot of numbers on the horizon. I'll do a quick rundown for you. Again, we got Disney tomorrow. It's a big one. Beyond Meat, Activision, Blizzard, Wednesday, CVS, GM, PayPal, Peloton, Etsy, Square, and Lyft, Thursday, JetBlue, Roku, Uber, and the old Dropbox, and even a little Kimco out there and a few others for you on Friday, like Kronos Group, everyone's favorite out there. So a lot of names still popping off out there. TheOptionsInsider.com, place to go to get the earnings move results, and indeed the earnings season reports. If you're trading in and around earnings right now, you want to check out those numbers. It's going to arm you with the info you need. And hey, you can't beat the price. It's all free. Let's go back around the horn, though, see what everyone else is keeping an eye on for this week. Let's start in the land of the new and improved, a.k.a. the Andrew 2.0. Mr. Andrew 2.0, sir, what do you keep an eye on for the rest of this week?
Yeah, so the May 1st market sell-off that we saw on Friday stuck out to me. It was a 90% down day with NYSE down volume at 91.7% of total up-down volume. So this is really the first time we're seeing signs since this rally began off the lows that the market is getting tired after reaching some of the Fibonacci extension targets I mentioned last week. So in my eyes, the question was never if we pull back, but rather how the market acts when we do. So that's what we need to watch going forward over the next week or two. One interesting tidbit is that when using Dow Jones data going back to 29, there have only been 3 times when the Dow advanced 32% and then retested its low. And 2 were in that 29 to 32 period. Another one was in the 32 to 37 bull market. So the weight of evidence still suggests that the pullback may simply be kind of a shakeout, and we're in the initial stages of a new primary uptrend. So further advance remains probable, in my opinion, unless we continue to see negative breadth. So if bears want to take control, they'll need to get us below that 2710 area in SPX. And before I finish here, I just want to remind everyone that we are offering cash rewards when you transfer funds to TradeStation. Those cash rewards are up to $2,500. We also offer a free suite of education as well. So you can find that at TradeStation.com/Options Insider. Again, that's TradeStation.com/Options Insider. Thanks, Mark.
There you go. TradeStation.com/Options Insider. Get the cash rewards. Cash is a good thing in this environment right now. The place to go to begin that journey. TradeStation.com/Options Insider. That music means we're kind of coming up against it. So we're going to do a combo of Around the Block as well as what you have that may interest us. Because we're beyond our time. Let's start with Uncle Mike, sir. First off, what are you watching for the rest of this week? And then, like Andrew just did, if folks are interested, they want to learn more about what you're doing, where should they go? What should they do, sir?
Watching the 2,800 mark on the SPX and earnings and news in general. And if you're interested in learning more about what we do here at St. Charles Wealth Management, go to stcharleswealth.com. Find out a little bit more about what we do to help people as a financial advisory firm. And if you want, just call me directly, 630-885-0017. Would love to have a conversation with you and see if you're a good candidate for us potentially managing some of your money.
There you go. stcharleswealth.com is the place to begin your journey there. And last but not least, Mr. Meatball, sir, if folks are intrigued by such educational opportunities as you mentioned before, where should they go? What should they do? And also, what are you watching for the rest of the week?
I mean, we got a lot of earnings. We still have lots of COVID. So I'm going to be watching all 19 COVIDs, and I am watching all these earnings. So come to, and if you want any information, I put out a couple of different blogs every day. Go to optionpit.com, give us your email and your name, and we'll send you a lot of really good information.
There you go. Optionpit.com is the place to go. And on behalf of the greasiest of meatballs and Andrew 2.0 and Uncle Mike and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. Keep more of them coming. We love to hear from you. If you'd like to hear more from us, we're actually pushing back crypto a little bit. Usually it's an hour after the show. This time it's going to be 2 hours after this show. So it'll be at 3 p.m. Central. We have guests coming in from far across the pond, and we hate to wake them up too early. So we're being generous out there. But crypto will be hitting us just an extra hour later. We'll see what we can do to keep some live stuff flowing for you in the live stream. And we'll be back in exactly 2 hours to talk all things crypto. Got a great guest, our buddy Mr. Simon of the Vol Space, Simon Ho, is going to be joining us to talk some all things crypto vol. So stay tuned for that. A lot's been popping off out there, as you might imagine. And then we'll be back later on this week with all of our usual suspects, OPR, all the other fun, OPR on Wednesday, probably some interviews this week as well, hitting the tape. And then we'll be back. Of course, you're going to get your dose of boot camp on the network on Wednesday as well. Then we'll be back again on Thursday for more of the Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/Options Insider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.